What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. In this video, I will go through high-level trends on ARK's daily trading activity I am seeing for this week, and then go into Zillow stock along with Opendoor Technologies, as they both are being bought up by Cathie Wood. So first, high-level trends. Friday was a tough day again for Ark Invest, as we see big red in both selling shares and market value tanking hard. Friday was a tough day for the markets, especially the Nasdaq really struggled. Even so, we may be seeing more investor outflow from Ark Invest funds, as we see huge selling of shares to meet those outflows. Besides Friday, I also see that Cathie Wood was buying the dip and selling the gains. On March 18th, we see gains in the market value and selling of shares here, as she is selling for profits. But right before that, on March 17th, we see market value going down and Cathie buying the dip, as we see shares increasing. This is true form of active trading and investing done by an actively managed institutional fund. For the passive investors who buy the ETFs, this is why you pay the high management fees. Amongst all these daily active buys and sells across the board, there are a handful of stocks that Cathie has been buying consistently and aggressively. One is Teladoc Health, but the other one is Zillow Group in the top 10 holdings. Today, we take a closer look at Zillow and other competitor called Opendoor Technologies. As we see here, Zillow is ARK's number 5 holding. And as we scroll down, we see Opendoor Technologies in number 52. Notice on how both of these stocks, there's a big positive buying trend as shown by the big blue bar. Ark Invest is very bullish on the online real estate market and doesn't seem to be scared of a housing bubble. Here's the rest of the spreadsheet. I can see that while Ark is selling their top holdings, they are buying up smaller ones as we go down the list. The buying trend is progressively being more positive as I scroll down, and we only see spots of selling. As many of you may already be familiar with Zillow, the company is a real estate and home-related information marketplace on mobile and the web. It has various operation segments. The Internet Media and Technology segment includes premier agents, rentals, and new construction marketplace, along with advertising. The Home and Mortgages segment includes buying and selling of homes directly, along with mortgage segment including advertising sold to mortgage lenders and the sale of mortgages on secondary market, along with a software called MorTech. And the company is well positioned for several reasons. One is that it has a very diversified revenue stream that lowers the risk of the company. The company offers buying, selling, financing, renting, as well as title and escrow services, pretty much anything that is necessary in the real estate market. And second, Zillow is a leading brand people turn to when they are interested in selling or buying homes. Zillow attracts a lot of users and eyeballs, which is what advertisers and real estate agents look for, and increasing view count makes this company well positioned. But there are drawbacks and risks associated with Zillow that you also need to consider. One big risk for Zillow is that the company directly buys homes and keeps those assets in their balance sheet. If there is another housing bubble and a crash like the 2008 or a downturn, Zillow is going to be backholding those homes in their balance sheets and bringing down the stock as home value goes down. Another risk is the rise of other competitors such as Redfin and Opendoor. Cathie Wood is investing heavily on Opendoor stock. Granted that she is showing signs of investing in both companies, Opendoor can gain more market share and bring down Zillow. And while the Q4 revenue declined year over year for Zillow, its total 2020 revenue grew by 22%. And the company is looking to expand by hiring more people. The latest news is that Zillow is expanding headcount by a whopping 40% in 2021 and hire more than 2,000 employees across the US. And most of these employees will be hired for the upcoming roles in mortgage and loans, product and software development, along with technology categories. Now, this is a superb article that's very comprehensive and I wanted to share with you. Opendoor Technologies is better bet than Zillow. The article is saying that when comparing to Zillow stock, Opendoor is undervalued. And after reading the introduction here, I want to go down to the Zillow comp values, where I really like the comp value analysis being done here. It basically shows that Opendoor trades at a forward EV to sales multiple of 3.34 in year 2021 and 1.85 in year 2022. And compared to Zillow's multiples, the EV to sales for Zillow are 6.42 in 2021 and 4.36 in 2022. And if we apply these ratios to Opendoor Technologies sales, the resulting enterprise value undervalues Opendoor stock by 48% in 2021 and 58% in 2022. And so this implies a target price of $40 per share. The stock closed today at $27 per share. Now, as you may be aware, Cathie Wood is investing in both Zillow stock and Opendoor, as she probably believes that the whole real estate industry can be disrupted by online technologies. But if you had only limited cash and had to choose between Zillow or Opendoor, I would say this article provides very good points to why you should invest to Opendoor Technologies instead of Zillow. Well, that's it for this video. Hope watching the daily trades of Ark Invest gives you more confidence in the stocks you're holding or new stock ideas to buy. Let this be a guide to your investing needs and long-term investing to reach financial freedom. Please invest safely, subscribe to the channel, and hit that like button. I thank you, appreciate you, and see you next time.